All right. I think our technology is going to cooperate this week. So we're just going to hold on just a minute or so. Make sure that everything is running. Everything is operating as it should, or we think that it should anyways. If you're out there, hashtag coffee break. Love to hear from you. Um, all right, I think we're going to get going. And welcome to this week's edition of the Construction CPA's Coffee Cafe. I am Lisa Raish. I am the Construction CPA. We are dropping the hammer on cash flow problems so you can build things that matter. This week's topic is we're going to talk about tips for reading your balance sheet. So we work with a lot of clients, and while most of our clients are in the industry, the construction industry, they are great at what they do. They love building buildings, houses, but they don't necessarily love reading their financial statements. But we do find it to be important that they understand some of the basics of reading not only the profit and loss statement, but also the balance sheet, so that when we are discussing what is going on in their business financially, they do have some basic information to kind of use to work off of. And so we can have good, solid conversations about their financial statements. So let's talk a little bit about the balance sheet. So balance sheet is broken up into three sections where you're going to have your assets, your liabilities, and then your equity. Your assets are going to be the things that you can typically identify as cash, or actual fixed assets, right? So in construction, our clients tend to have equipment, large, heavy equipment, trucks, etc. But your accounts receivable, the invoices that you have sent out to your customers, are also an asset to you. What's a liability? Your liabilities are going to be those accounts payable, right? The invoices from your vendors that you have sitting, waiting to be paid. Other things like other liabilities are going to be your credit cards, right? A number of our clients use their credit cards. So your balance due to the credit card company is a liability. The other really large item that you need to be aware of, again, and most are, is debt, right? So in construction, most of our clients are leveraging debt in some fashion, whether it be to acquire the assets that they have, the heavy equipment, the trucks, so on, or many of our clients have lines of credit, which they are using for short-term capital, especially with the issues that construction run into with it taking so long in many cases to get paid. It's a challenge across the industry. So a lot of time clients typically have lines of credit, which is also considered a liability to you. And then the last item is going to be your equity in the business. So that is anything that you've put into the business. So have you physically put money into the business, physically put capital into the business? It is the accumulation of all of the profits and loss from your business in subsequent years. So equity, and you want to think about equity in a business just like you would in a house, right? Your house is worth so much. If you have debt on it, the difference between its value and the debt you have on it is your equity. That is very, very back of the envelope, very basic way to think of it and look at it. But again, it gives you an idea of what equity is. All of those are important. Each one have their own specific importance to your financials. You want to have assets, you would like to have cash, be able to be liquid in order to pay the liabilities, the debts, and so on. So each one of those are important. The heavier you are in one versus the other can indicate challenges in other aspects of your business. So it's something to think about. You don't want to be so weighted, so heavy in one area versus the other, especially in debt and liabilities. That tends to be a challenge that happens in construction a lot. Construction companies run into issues pretty regularly where they have more debt than they have cash flow. So again, something to kind of think about there. So you want to be able to determine the short-term liquidity of your business, right? So you're going to use things like your current ratio and your quick ratio. And those are things that as an owner, we talk about those. Sometimes our owners glaze over. They're not interested in hearing that. But the reality is on a really high level, you're going to want to have more assets than you want liabilities. You want more cash. Cash is king in any business. Again, if you have receivables are still good, but you have to be able to collect them and collect them in a timely fashion. And then having actual physical assets, equipment, trucks, etc. Those are all good things to have. When it comes to actual physical assets, it does take a little bit longer to liquidate those items should you need the cash. But again, something to think about, right? You want to have more assets than liabilities. The more debt you have, again, the more of a challenge you're going to have in actually settling that debt. Debt ratio tends to be something that the banks will look at when they're looking to finance you. Again, how much debt do you have? Are you over leveraged, right? Do you have more debt than you can actually physically pay back? That's what they're talking about when they're talking about being over leveraged. So you want to use your debt, but you want to use it strategically. Those assets, if you are borrowing money to pay for assets, those assets in turn need to be creating revenue for you. So are they working for you to create subsequent revenue? That's the most important thing. You want to look at the financial health of your business, right? So you want to look at how your assets are growing, right? Your assets should be growing. You should be being able to accumulate more cash and be able to do more things with that cash. Your debt levels, you want to make sure your debt levels are coming down. If they're constantly going up, then you're going to have a challenge in your business. Again, if you have major swings in equity, right? Are you putting money into your business because you can't get any more additional funding? Again, what does that show you? That from a health position shows you that the business is not as healthy as it should be. You want to make sure that you understand what the key metrics are in your industry. The metrics in each industry are going to be, there'll be metrics in an industry that are specific to it. So again, you want to be familiar with things like your current ratio. But when we look at construction, you want to make sure, when we're talking about ratios around your jobs and your job costing, those are really the most important ones that you want to be aware of when you are looking at the financial statements. For us, we work a lot with construction businesses. Again, it's not the only business out there, just happens to be the one that we work a lot with. But understanding all of the pieces of your balance sheet, because in the aggregate, it tells a story about the health of your business. Do you have assets? Do you have receivables that can easily be converted into cash, which in turn can be used to settle liabilities that you have? How much liability do you have? Do you have a lot of long-term liability in long-term debt? Is it all short-term? Again, those all show the health and the actual overall performance of your business. And then when you marry your balance sheet together with your profit and loss statement, the two of them commingled tell an even greater story about what's going on in your business, because your balance sheet is going to tell you a story about your business at one moment in time, today, whatever today is for you, today's date. Whereas your profit and loss statement is going to be over a period of time. It could be a month, it could be a quarter, it could be a year. So this is at one moment in time. So it's important to not only understand the different pieces of your balance sheet, but understand how the different pieces of the balance sheet work cohesively with your profit and loss statement to give an overall picture of the health of your business. If you have any questions, please feel free to drop them in the chat. We always look forward to hearing from you. And as always, it was great to see all of you this week. We look forward to seeing you next week. Have a wonderful weekend, and we'll talk to you soon.